The asset finance market finds itself in a bit of a paradox. Actually, on a lending level, there's high growth in the market, lots of new money entering that market and lots of new funding being available to customers. However, we are seeing disruption entering the market, and that's starting to cause some challenges for the sector. Interest rates remain low, which means that companies are having to go out and try and diversify their product range and their customer set. How do you analyse who's a good customer, and how do you make sure that you spread your risk across a wide range of different organisations or consumers? On top of that, there is the exception that at some point the tech giants are also going to enter this market. We've seen them enter retail banking, we're now seeing them enter into credit, and it won't be long before the asset finance market is also affected by the likes of Amazon, Google or Facebook. With all that going on, there is an exception that business needs to change. Traditional businesses, those established businesses, need to look at ways that they can create flexibility and efficiency within their business model. Digitalisation is really seen as the key to making that happen. How can we move to a 24/7 efficient business if we don't engage with our customers through those digital channels? So around digitalisation, I guess the question that we're always asked is how do you go digital? How do you approach some of that challenges, particularly for those traditional businesses that haven't gone into a 24/7 model yet? Really, digitalisation isn't about technology. It's about looking outside and then outside at your customers and what you're trying to achieve with your customers, and then bringing that inside and looking at what technology could support that change. That means that you've really got to start analysing your customer journey. Where do your engagements happen with your customer? What information does your customer want to have? And what information do you need from that customer to be able to make informed decisions? A good example of that, I think, is around sort of data and data mining. At the moment, a lot of our customers are talking about the data that they hold and how do they get the best out of that data. For me, the question is the wrong way around. It shouldn't be what data do I have, it should be what data do I need and where do I go to get that data to make that happen. Once you start establishing where you can get your data points from, then you can start looking at supporting technologies such as data mining to bring that data out and bring it to life. So I'm often asked, what do we see from a technology point of view? What do we see as the kind of game changer for the next few years in this sector? And I think for me, open banking really gives us an opportunity to explore a different engagement level with our customers. Firstly, the opportunity to really explore a customer's transactional data allows us to expand our risk profile potentially into new avenues where we haven't gone before. At the moment, there is a challenge in the market, particularly with the millennial generation, where they maybe don't have as good credit history as some of our more established consumer groups. And actually using things like open banking, we can explore the real affordability and the real creditworthiness of a customer in that space. Secondly, when you look at it from an e-contracting point of view, one of the challenges when you're doing a digital transaction is the messy middle, as I like to call it, where you have to move from a digital transaction to a manual process. And in that manual referral in a credit process, that's one of the big areas of weakness in that e-contracting space. You're effectively asking a customer to wait while a manual decision is made offline about their creditworthiness. Open banking allows you to access that information very, very quickly and reduce the number of manual referrals that might happen within your business. And finally, from a security point of view, there's a lot being made around know your customer at the moment, and how do you really make sure that the customer you're lending to is a customer that you want to lend to. With open banking, again, having access to that transactional data, that real data, and the authorization from that customer to review it, you really get a sense and an understanding of who that customer is and whether they're a customer you want to work with.